Hello, my dear students. A very warm welcome to all of you in Shri Jaindra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll continue with Accounting Chapter 8, Unit 3, that is Admission of a Partner. This is Lecture 2. Let us begin. Reserves in the balance sheet. Whenever a new partner is admitted, any reserve lying in the balance sheet should be transferred to the capital accounts of old partner in their old profit sharing ratio. The necessary journal entry would be debit reserves or profit and loss account and credit old partner's capital account in the old profit sharing ratio. Computation of new profit sharing ratio. When a new partner is admitted and there is no agreement to the contrary, it is supposed that the old partners will continue to have inter say at the old profit sharing ratio. For example, A and B are in partnership sharing profits and losses in the ratio of 3:2. C is admitted, a new partner is admitted for 1/5 share. For computation of new profit sharing ratio, firstly, deduct the share offered to the new partner from 1, that is 1 minus 1 by 5. 1/5 is the share of C, 4/5 is the combined share of A and B. Divide the balance of share between A and B in the ratio of 3:2, that is A's share 4/5, 4 by 5 multiplied by 3 by 5, that is the old profit sharing ratio 3:2. So the new share of A is 12 by 25. In case of B, 4 by 5 is the remaining share after giving C 1 by 5. So 4 by 5 multiplied by 2 by 5. The new share is 8 by 25. I believe you understood. The new profit sharing ratio is A 12 by 25, B 8 by 25 and C 1 by 5. That is C 5 by 25. The new profit sharing ratio is 12:8:5. I believe you understood. Let us continue. Computation of new profit sharing ratio, several cases. Case 1. When new partner's share is given, but the question is silent about the sacrifice made by the old partners. In this case, it is assumed that the old partner will share the remaining share in their old profit sharing ratios only. Example, A and B are partners sharing profits in the ratio of 3:2. They admit C for 1/3 share in future profits. Calculate the new ratio. Total share of the firm is 1. C's share is 1 by 3. So remaining profit for A and B will be 1 minus 1 by 3, that is 2 by 3. 2 by 3 is the combined share of A and B. This remaining share of 2 by 3 is divided between A and B in their old profit sharing ratio. Their old profit sharing ratio is 3:2. So 2 by 3 multiplied by 3 by 5, that is 6 by 15. B share 2 by 3 multiplied by 2 by 5, that is 4 by 15. And C share is 1 by 3. So 1 by 3 multiplied by 5 by 5 is 5 by 15. The new profit sharing ratio of A, B and C is 6 by 15, 4 by 15 and 5 by 15, that is 6 is to 4 is to 5. Case 2. When new partner purchases his share from old partners in a particular ratio, in this case, the new ratio of the old partners will be calculated by deducted the proportion given to the new partner from the shares of old partner. Example, A and B are partners sharing profits and losses in the ratio of 3 is to 2. They admit C as a new partner for 1/3 share in the future profits, which gets 1/9 from A and 2/9 from B. C will get 1/9 from A and 2/9 from B. Calculate the new ratio. Solution. A's old share is 3/5. A's sacrifice in favor of C is 1/9. It is given in the question. So from 3/5, the sacrifice is 1/9. 3/5 minus 1/9 is 22/45. B's old share is 2/5. B's sacrifice is 2/9. So B's new share will be 2/5 minus 2/9, that is 8/45. C's new share equals 1/9 into 5/5 equals 5/45. The new ratio of A, B and C is 22 is to 8 is to 5. I believe you understood. Case 3. When the old partner surrenders a particular fraction of their share in favor of new partner, in this case, following steps are followed. Determine the share surrendered by the old partners. Find the new share of the old partner by deducting share that is surrendered from the old share. Calculate share of new partner by taking the sum surrendered share of old partners. Calculate new ratio. Example, A and B are partners sharing profits and losses in the ratio of 3 is to 2. They admit C as a new partner. A surrenders 1/3 of his share. 1/3 of his share. A's share is 3/5. So we need to calculate 1/3 of 3/5, and whatever value we'll get is the share surrendered in favor of the new partner. B surrenders 2/3 of his share. His share is 3/5. So 2/3 of 3/5 needs to be calculated, and whatever figure we'll get, that is the share surrendered in favor of C. Calculate the new ratio. I believe you understood the question. A's old share is 3/5. A surrenders 1/3 of 3/5, that is 3/15. A's new share, old share 3/5, share surrendered 3/15. 3/5 minus 3/15 is 6/15 is the new share of A. B's old share is 2/5. Out of 2/5, share surrendered 2/3 of 2/5. 2/5 multiplied by 2/3 is 4/15. B's new share would be 2/5 minus 4/15, that is 2/15. C's share is 3/15 plus 4/15 equals 7/15. 3/15 plus 4/15, that is 7/15. The new ratio is 6/15, 2/15 and 7/15, that is 6 is to 2 is to 7. Case 4. When the new partner requires his share entirely from a new partner, from a when the new partner acquires his share entirely from a new partner. In case of sacrificing partner, share is calculated by deducting his sacrifice from the old share. A and B are partners sharing profits and losses in the ratio of 3:2. They admit C for 1/5 share in profits, which he acquires entirely from 9. So entirely from A. So A will sacrifice whole, that is 1 by 5, and C will receive 1 by 5. Calculate the new ratio. A's old share 3 by 5. A's sacrifice in favor of C is 1 by 5. A's new share is 3 by 5 minus 1 by 5, that is 2 by 5. B's share is 2 by 5, there is no sacrifice. So new share is also 2 by 5. C's new share is 1 by 5. So the new ratio is 2:2:1. Case 5. When the new partner acquires his share from the old partners in a certain ratio. In this, the sacrifice of each partner is deducted from their old share. Example, A and B are partners sharing profits in the ratio of 3:2. C is admitted for 1/3 share, which he acquires from A and B in the ratio of 2:1. 1/3 is divided between 2:1, that is 2 by 3 and 1 by 3, and whatever results will get, A will sacrifice and B will sacrifice in favor of C. Calculate the new ratio. Solution. A's old share is 3 by 5. A's sacrifice will be 2 by 3 into 1 by, change this figure as 1 by 5, 1 by 5th share. A's old share is 3 by 5. A's sacrifice is 1 by 5 in the ratio of 2:1, so 2 by 3, that is 2 by 15. A's new share 3 by 5 minus 2 by 15, that is 7 by 15. B's old share 2 by 5. B's sacrifice is 1 by 5 into 1 by 3, that is 1 by 15. B's new share is 2 by 5 minus 1 by 15, that is 5 by 15. And C's share is 1 by 5 multiplied by 3 by 3. So this is 3 by 15. So the new ratio is 7:5:3. 7:5:3. Let us move ahead. Who is a sacrificing partner? The partner whose share have decreased as a result of change is known as a sacrificing partner. What is sacrificing ratio? Ratio in which the old partner sacrifice their share in favor of new partner is called sacrificing ratio. This ratio is calculated by taking out the difference between old profit shares and new profit shares. Sacrificing ratio equals old profit sharing ratio minus new profit sharing ratio. Gaining partners. The partners whose share have increased as a result of change are known as gaining partners. Gaining ratio. The ratio in which the partners have agreed to gain their shares in profit from the other partner or partners is known as gaining ratio. This ratio is calculated by taking out the difference between the new profit shares and old profit shares. Example, X and Y are partners in a firm sharing profits and losses in the ratio of 5:3. They admit Z into the partnership. The new ratio is 3 is to 2 is to 1. Calculate the sacrificing ratio. Solution. X sacrifice equal to old share minus X new share. X old share is 5 by 8 minus new share is 3 by 6. So X sacrifice is 6 by 48. Y sacrifice is Y's old share minus Y's new share. Y's old share is 3 by 8. Y's new share is 2 by 6. So 3 by 8 minus 2 by 6 is 2 by 48. The sacrificing ratio is 6 is to 2, that is 3 is to 1. Example. A, B and C are partners, are sharing profits in the ratio of 5 is to 3 is to 2. Calculate the new profit sharing ratio and sacrificing ratio in each of the following alternative cases. Case 1. If C acquire 1 by 10th share from B. Case A. The existing share is 5 by 10, 3 by 10 and 2 by 10. C will acquire 1 by 10 from B. So C's gain is 1 by 10 and B's sacrifice is 1 by 10. So 3 by 10 minus 1 by 10 is 2 by 10. Over here 2 by 10 plus 1 by 10 is 3 by 10, new ratio. And 5 by 10 is 5 by 10, no change. Their new shares will be 5 is to 2 is to 3. And share sacrificed by B is 1 by 10. I believe case A is clear. Case B. If C acquired 1 by 10th share equally from A and B, that is 1 by 10th multiplied by 1 by 2 from A and 1 by 10 multiplied by 1 by 2 from B. Case B. Their existing share is 5 by 10, 3 by 10 and 2 by 10. C's gain is 1 by 10. 1 by 10 multiplied by 1 by 2 is 1 by 20. Is B's sacrifice and A's sacrifice. So share acquired by C from A and B is 1 by 20, 1 by 20. So A's new share will be 5 by 10 minus 1 by 20, that is 9 by 20. In case of B, 3 by 10 minus 1 by 20 is 5 by 20. And C's share will be 2 by 10 plus 1 by 10 is 3 by 10. The new profit sharing ratio between A, B and C is 9 is to 5 is to 6. And sacrificing ratio between A and B is 1 is to 1, because in the question it is given that they'll share the sacrifice equally. Case C. If C's share is increased by 1 by 10th share by acquiring from A. Case C. Existing shares is 5 by 10, 3 by 10 and 2 by 10. Share acquired by C from A, that is 1 by 10. So 1 by 10 would be deducted from here and 1 by 10 would be added in C's share. C's new share will be 2 by 10 plus 1 by 10 equal to 3 by 10. B's share would be same, that is 3 by 10. And A's share 1 by 10 is deducted from 5 by 10, the old share. So 5 by 10 minus 1 by 10 is 4 by 10. The new profit sharing ratio is 4 is to 3 is to 3. Share sacrificed is 1 by 10 by A. Share acquired by C, new share minus old share. New share is 2 by 10, new share is 3 by 10, old share is 2 by 10. So share acquired by C is 1 by 10. It is directly given in the question. We should not calculate it like this. Case D. If C share is increased to 3 by 10 by acquiring from B, increased to 3 by 10. Case D. Existing shares of all the partners: A 5 by 10, B 3 by 10, C 2 by 10. C share is increased to 3 by 10. So additional is 1 by 10. Share acquired by C from B 1 by 10. In case of B, 1 by 10 is deducted from the old share. So 3 by 10 minus 1 by 10 is 2 by 10. So their new shares will be 5 by 10, 2 by 10 and 3 by 10. The new profit sharing ratio of A, B and C is 5 is to 2 is to 3. Share sacrificed by B is 1 by 10. Case E. If A, B and C decided to share future profits and losses in the ratio of 5 is to 2 is to 3, case E. Existing shares 5 by 10, 3 by 10, 2 by 10. In future they want to share in the ratio of 5 is to 2 is to 3. So 5 by 10, 2 by 10, 3 by 10. There is no change in case of A. In case of B, B's old share is 3 by 10 and new shares is 2 by 10. So B's sacrifice is 1 by 10. C's old share is 2 by 10, new share is 3 by 10. So gain is 1 by 10. C gains by 1 by 10 and B sacrificed by 1 by 10. I believe you understood. Case F. If A, B and C decides to share future profits and losses in the ratio of 2 is to 3 is to 5. Case F. Their existing share 5 by 10, 3 by 10, 2 by 10. In future they want to share in the ratio of 2 is to 3 is to 5. So 2 by 10, 3 by 10 and 5 by 10. There is no change in case of B's share. In case of A's share, A will sacrifice 3 by 10. 5 by 10 minus 2 by 10 is 3 by 10. And B will gain 3 by 10. 2 by 10 minus 5 by 10 is gain 3 by 10. So C gains by 3 by 10 and A sacrifice by 3 by 10 share. Case G. If A, B and C decide to share future profits and losses in the ratio of 2 is to 1 is to 2, their new share is 2 is to 1 is to 2. Their existing share is 5 by 10, 3 by 10, 2 by 10. New share is 2 is to 1 is to 2. So 2 by 5, 1 by 5 and 2 by 5. C's gain is 2 by 10. A's sacrifice is 1 by 10 and B's sacrifice is 1 by 10. So C gain 2 by 10 share and A sacrifices 3 by 10 and B sacrifices 3 by 10 share. H. Case H. If A, B and C decides to share future profits and losses equally, that is 1 is to 1 is to 1. Their existing share is 5 by 10, 3 by 10 and 2 by 10. New share is 1 by 3, 1 by 3, 1 by 3. C's gain is 4 by 30, B's gain is 1 by 30, A's sacrifice is 5 by 30. B's gain is 1 by 30, C's gain is 4 by 30 and A's sacrifice is 5 by 30th share. I. Case I. If A, B and C decide that the future profit sharing ratio between B and C shall be same as existing between A and B. Case I. Ratio of A and B is 5:3. Ratio of B and C should be 5:3. Since B's share in relation to A is 60%, 60% of A's share and C's share should be 60% of B's share. The C share is 60% of 3. New profit sharing ratio between A, B and C. Over here C share is 1.8. So 5:3 is to 1.8 or 25:15:9. The existing shares is 5 by 10, 3 by 10, 2 by 10. New share 25 by 49, 15 by 49, 9 by 49. A's gain is 5 by 490, B's gain is 3 by 490, C's sacrifice is 8 by 490. C sacrifice by 8 by 490, A gains by 5 by 490 and B gains by 3 by 490. Illustration 5. A and B are in partnership sharing profits and losses in the ratio of 3:2. They take C as a new partner. Calculate the new profit sharing ratio if first C purchases 1 by 10 from A. Solution. First, C purchases 1 by 10 from A. New profit sharing ratio A 3 by 5. A sacrifice is 1 by 10. B is 2 by 5 and C is 1 by 10. Six by 10 minus 1 by 10 equal to 5 by 10. 2 by 5 multiplied by 2 by 2, it is 4 by 10 and over here it is 1 by 10. New profit sharing ratio is 5:4:1. I believe you understood. Case 2. A and B agrees to sacrifice 1/10 share to C in the ratio of 2:3. So C's share is 1/10. A's sacrifice 1/10 multiplied by 2:3, so 2 by 5. This would be 2 by 50. B's sacrifice 1 by 10 multiplied by 3 by 5, so 3 by 50. This is the sacrifice 2 by 50 and 3 by 50. New profit sharing ratio A equal to Old ratio, that is 3 by 5 minus sacrifice 2 by 50 equals 30 by 50 minus 2 by 50. So 28 by 50 B 2 by 5 minus 3 by 50 20 by 50 minus 3 by 50 17 by 50 C 1 by 10th share, that is 1 by 10 multiplied by 5 multiplied by 5. 5 by 50 A is to B is to C. 28 by 50 is to 17 by 50 is to 5 by 50. That is 28 is to 17 is to 5. I believe you understood. Case 3. Case 3. Simply gets 1/10 share of profits. Simply gets 1/10 share of profits. Let the total share be 1. C's share equals 1 by 10. Remaining share equals 1 minus 1 by 10 equals 9 by 10. Remaining share is 9 by 10. This 9 by 10 needs to be distributed between A and B in old profit sharing ratio. A 9 by 10 multiplied by 3 by 5 is 27 by 50. 9 by 10 multiplied by 2 by 5 equal to 18 by 50. C is 1 by 10. So multiplied by 5 by 5, that is 5 by 50. A is to B is to C. 27 by 50 is to 18 by 50 is to 5 by 50. So the new ratio is 27 is to 18 is to 5. I believe you understood. I believe you understood this. Let us continue. Illustration 6. A and B are in partnership, sharing profits and losses in the proportion of 3/4 and 1/4 respectively. Their balance sheet as on 31st March 2016 was as follows: cash 1000, trade receivable 25,000, inventory 22,000, plant and machinery 4,000, trade payable 12,000, bank overdraft 15,000, capital account 15,000, and B's capital 1,000. On 1st April 2016, they admitted C into partnership firm on the following terms. First, C to purchase 1/3 of the goodwill for rupee 2,000 and provide 10,000 as capital. Goodwill not appear in the books of accounts. Next, Further, profits and losses are shared by A, B, and C equally, that is 1 is to 1 is to 1. Third, plant and machinery is reduced by 10%. And 500 is to be provided for estimated bad debts. Inventory is taken at the valuation of 24,940. Next, by bringing in or withdrawing cash, and capitals of A and B are made proportionate to that of C on their profit sharing basis. Set out entries to the above arrangement in the firm's journal and give the partners capital account in tabular form. We need to journalize first and then we need to make partners capital account. I believe you understood. Solution. Calculation of goodwill. C pays 2000 rupees for goodwill for one third share of profits oblique loss. Total goodwill is 2000 multiplied by 3 into, that is 6000 rupees. Gaining ratio. Gaining ratio. Gaining ratio. A, B, and C. Old ratio 3 by 4, 3 by 4 dash. New ratio 1 by 3, 1 by 3, 1 by 3. So it's a C's gain. So it would be 3 by 4 minus 1 by 3. Over here it would be 3 by 4. In the case of A, it is 3 by 4 minus 1 by 3. In case of B, it is 1 by 4 minus 1 by 3. In case of C, it is 1 by 3 and it is gain. In case of A and B, it is 3 by 4 multiplied by 3 by 3 minus 1 by 3 multiplied by 4 by 4. So it is 9 by 12 minus 4 by 12 equals 5 by 12. In case of B, it is 1 by 4 multiplied by 3 by 3 minus 1 by 3 multiplied by 4 by 4. It is 3 by 12 minus 4 by 12. So 1 by 12 in minus, it is also gain. So A is sacrificing partner, B and C is gaining partner. B's gain equals 6000 multiplied by 1 by 12 equals 500. C's gain equal 6000 multiplied by 1 by 3, that is 2000. So total gain is 2500. I believe you understood till here. I believe you understood till here. Let us pass journal entries now. Journal entries. Particulars: debit rupees, credit rupees, that is amount. Revaluation account debit to plant and machinery account to provision for bad debts account. Plant and machinery it is 400 and provision it is 500. Revaluation 900 debit. Next, inventory account debit 2940 to revaluation account 2940. Transferring of revaluation profit, revaluation account debit revaluation profit, that is 2940 minus 900, 2940 minus 900, which is 2040, to old partners in old ratio. A capital account to B capital account. 1530 and 510. 3 is to 1. 3/4 and 1/4. I believe it is clear till here. Next. Cash account debit to C's capital account. New capital brought in, that is 12,000. And adjustment entry for goodwill. Gaining partner to sacrificing partner. C capital account debit 2000. B capital account debit 500 to A capital account 2500. Let's make partners capital account now. Partners capital account. Partners capital account. particulars A, B and C, particulars A, B and C by balance brought down 15,000, 10,000 by cash, capital brought in by C which is 10,000 by revaluation profit 15, 30 and 510 by B capital account 500 to A capital account 500. Adjustment entry for change in profit sharing ratio, the gaining and sacrificing partners entry. Now the closing balance is to be fixed same as C. So C's closing balance is 10,000. It is written in the question that the closing balance should be same as C. So to balance carried down, extra capital should be withdrawn or brought in. So over here extra capital is there, 19,030, 10,510. 19,030 minus 10,000, 9030. 10,510 minus 10,000 minus 500, so 10. The next topic is hidden goodwill. When the value of goodwill of the firm is not specifically given in this question, the value of goodwill has to be implied or inferred as follows. Incoming partner's capital multiplied by reciprocal of the share of incoming partner less total capital after taking into consideration the capital brought in by the incoming partner. The difference will be the value of goodwill. Let us take an example. Example, incoming partner's capital, incoming new partner's capital is 2000. His share is 1/3. Total capital would be 1000 old partner A plus 2000 old partner B plus C, it is 2000. So total capital is 5000. Now you put in this formula incoming partner's capital, that is 2000 multiplied by reciprocal 3 equals 6000 minus total capital that is 5000. So 1000 is extra or excessive. This is the value of goodwill. This is the value of goodwill. I believe you understood this. Let us continue. Next question, illustration 7. A and B are partners with capitals of 7000 each. They admit C as a partner of 1/4 share in the profits of the firm. C bring 8000 as his share of capital. Give necessary journal entry to record goodwill. Solution. C share is 1/4 and he brings 8000 as his capital. So 8000 multiplied by 4/1, that is reciprocal, is 32,000 less total capital. Total capital of A, B and C. A and B it is 7000 and 7000 each, and C it is 8000. So total it is 22,000. That means it is 10,000 extra. This is goodwill. This is value of goodwill. Journal entry is gaining partner's capital account is debited and sacrificing partner's capital account is credited. So journal entry C's capital account debit to A's capital account to B's capital account. Goodwill is 10,000 and C's share is 1/4. C's share of goodwill equals 10,000 multiplied by 1/4, that is 2,500. So C share gaining is 2,500 would be distributed equally 1250 and 1250. I believe you understood. Next question, illustration 8. A and B are in partnership sharing profits and losses equally. The balance sheet of Messrs A and B as on 31st December 2016 was as follows. Assets, sundry fixed assets 60,000, inventory 30,000, bank 20,000. Capitals A 45,000 and B 45,000. Trade payable, that is 20,000. On 1st January 2017, they agreed to take C as 1/3 partner to increase the capital base to 1,35,000. C agreed to pay 60,000. Show the necessary journal entries and prepare partner's capital account. Solution. Old profit sharing ratio equals 1:1. New profit sharing ratio equals 1:1:1. C's share of capital, that is 1,35,000 multiplied by 1/3, that is 45,000. Goodwill equals C bought in 60,000, 45,000 she bought in for capital. So for goodwill she bought in 15,000 for C share. Total goodwill equals 15,000 multiplied by 3, which is 45,000. Journal entries. Journal entries. Particulars, debit and credit. Bank account debited 60,000 to C's capital account 60,000. Cash brought by C for 1/3 share. C's capital account 15,000. Gaining partner to A's capital account to B's capital account 7,500, 7,500. Goodwill withdrawn, so A capital account debit, B capital account debit to C capital account 7,500 debit, 7,500 and 15,000 credit. Partners capital account. A, B and C. A, B and C. By balance brought down 45,000, 45,000 C brought in 60,000, so by bank 60,000, by C 7,500, 7,500 for goodwill, to A to B 7,500, 7,500, withdrawal of goodwill, to bank 7,500, 7,500, by old partners, closing entries, C 60,000, B 52,500, and A 52,500. Balancing figure 45,000, 45,000, and 45,000. To balance carried down. To balance carried down. I believe you understood. I believe you understood what we have done in today's class. We have learnt about reserves that is there in the balance sheet is to be distributed in the old ratio to the old partners. Computation of new profit sharing ratio. We have seen several cases. We have learnt about sacrificing partner, that is sacrificing ratio. We have also learnt about the gaining partner, that is gaining ratio, and done several examples in relation to these are a detailed cases of how to find new ratio in several different perspectives. Then we started with the illustration part and practiced the provision that we have learned. At last we have learned about how to find hidden goodwill. So incoming new partner's capital account, reciprocal of his share, compare it with the total capital including new partner's capital, the difference between the value of goodwill. I believe you understood. I believe you understood. We are keeping it till here today. We are keeping it till here. Thank you. Thank you.